Hello guys, welcome to Finding Signals, and I'm making a video after a short break, so please forgive me for that. I was engaged in something, but today we are going to discuss about the stock of Jindal Poly Films. Now what does Jindal Poly Films do? It is into the business of packaging. So before moving to company, let us first have a look at the industry scenario of packaging. So packaging industry serves various segments like textile, food and beverage, pharma, beauty, personal care, etc. Now packaging films can be divided into two major subcategories, which are BOPP and CPP films. So BOPP stands for biaxially oriented polypropylene, while CPP stands for cast polypropylene. So let us not go on their names. What are their applications or differences? So BOP and CPP films differ on their rigidness, where CPP films are more soft while BOPP are little bit rigid. Also, it is not easy to dead fold a CPP film, while BOPP films has better characteristics when it comes to dead folding. BOPP films are used in the flexible packaging industry for labeling, etc., while CPP films are used for food wraps, bakery products, lamination, garment bags, etc. So among these, which types of films which are produced by JPFL? The films include BOPP films, PET films, metallized films, coated films, CPP films, and thermal films. Company also manufactures some non-woven fabrics, which includes spun bond and spun melt. Now spun bond are used for fabrics like shopping bag, and spun melt mainly used for medical fabric, which are also a growing market. So guys, one of the major product of Jindal Poly Films is the PET films. Now PET films, as we said, that they are used for flexible packaging, and out of the total packaging market, these films account for 3/4 of the market share. So they are widely used at every place all over the world, and also the demand for thin PET films is growing at a rapid pace, and in this environment where we can see the continuous improvement in standard of living, the demand for packaged products is going to increase. So demand for these films is expected to increase a lot in future too. Such films are also used for control panels, nameplates, electrical insulation, shims, spacers, gaskets, and other industrial uses. The other product of the company includes BOPP films, which are mainly used for labeling, for creating attractive packaging. So the reason why they are used widely for labeling, because the label should be a material which is easy to print on. It should be resistant to outside environment like water or other chemicals. So BOPP films labels are perfect for such uses. Another product of the company includes metallized films, where they use aluminium for packaging, which are used in various automotive components and other industrial uses. Now, one major drawback or one limitation for the company is that the product of the company depends on the aluminium, and aluminium is volatile in nature. The prices, as we know, the commodity prices keeps on fluctuating. So if company is able to pass on this cost to customers, then it is well and good for the company. And for Jindal Polyfilms, they have the goodwill in the market, and they can pass on the price. And other limitation for the company is that the product are derived from the crude oil, the derivatives of crude oil. And like we just saw recently, the crude oil prices just skyrocketed due to the Russia and Ukraine scenario. So in such scenarios, there could be some problem for the company, but otherwise, this is a growing market. But in a similar way, every business has to face certain challenges, but how a company faces those challenges depends largely upon their management team. Now, the next product which the company has is coated films. Now, here company has done forward integration. Now, they were producing those transparent films, and now they have also ventured into this coated films. This has increased the product range with the company, and they are able to compete with other companies in the market at a competitive rate, because here the raw material, also the plain films, is also produced by the same company, and they are then selling the coated ones. Like this, they also have CPP films, again used for packaging, then thermal lamination films used in magazines, papers, and etc. Also non-tearable paper used for photo albums and other uses, gifts card, playing cards, calendars, and then medical X-ray films. Now, guys, when we look at the fundamentals of Jindal Poly Films, we can see that the company has a market cap of around 5,000 crores, so it is a small cap company. The current price of the stock is around 1200 rupees, and dividend yield is 0.17%, which is not significant. But the book value of the stock is around 712, which makes the price to book value ratio as very low, which is 1.69. So this is a good news about the company, a good factor. Even the PE ratio of the company is just 5.78. This is a low PE ratio, and we can see that company is far undervalued. Now the return on capital employed percentage is around 32% and return on equity is around 35%. So these return ratios are just so impressive. And then also we can see that the stocks PE ratio is so low. Even the industry PE ratio is around 13. So we can see that the PE ratio of the stock is less than half of the industry. And debt to equity ratio is 0.27. We can see that debt also is not a huge factor why a company is so undervalued, because it is not a huge debt. Face value is rupees 10 and it has generated 60% returns in the last 1 year. So guys, we already discussed about the products of the company and their applications, like they are used for medical x-ray purpose and flexible packaging, tape and textile lidding, print lamination, etc. But here we can see the revenue split of the company. Now till FY20 the packaging films accounted for 91% of the revenue, but in FY21 it dropped to 85%. Now this does not mean that the revenue of the company dropped. In fact, the other revenue segment, which is non-woven fabrics, in FY20 it was just 9%, but in FY21 this segment has accounted for 15%. So a growth in this segment is a huge positive for the company, which means that the company has been establishing new revenue sources, and it can be so beneficial for the company in the long term, because one product category, too much dependence on one product is sometimes dangerous and can be risky. Now, even the domestic sales, we can see that it was 80% in FY20 and outside India was 20%. Now in FY21, we can see it has dropped to 73%, the ratio. And sales abroad India, outside India, has increased to 27%. Another great thing about the company. So having stable and diversified revenue sources is a great asset for any company. And here we can also see that the company has the largest manufacturing capacity for BOPP films, then BOPET films, then CPP, followed by metallized and coated products. Now, when we compare JPFL with its peers in the packaging industry, we can see names like Polyplex, EPL, Uflex, Cosmo Films. We can see that the market cap of the company is around 5,000 crores. Polyplex market share is above that. In the dividend yield, we can see that almost all the companies have a similar dividend yield range between 1 to 2%, but Polyplex has an exceptional dividend yield percentage around 7%. Net profit for the company is good. The growth in quarterly profit is around 10%, little less than the other companies in the same quarter. Sales has a good figure, quarterly sales. And have a look at the return on capital employed percentage, where Jindal Poly Films is at 32 percentage approx, and other companies at 16, 15, and max is 26% of Polyplex. So here we can see how effectively Jindal Poly Films is using their capital for the business. Now, when we have a look at the P&L statement of Jindal Poly Films, we can see that the sales were around 1700 crores in 2010, and now they have reached to 4000 crores, and the operating profit has grown four times from that period. We can see it was around 265 crores, now it is above 1100 crores. Even the operating profit margins have improved and they have reached to 27% in FY21, and for trailing 12 months it is around 23%. EPS of the share has reached above 200 in trailing 12 months period. It was around 180 rupees in FY21, so a growth in that also. When we have a look at the balance sheet, we can see that the reserves of the company have grown consistently and has reached to 3000 crores. Remember, the market cap of the company was around 5000 crores, so reserves seem sufficient. And borrowings also, guys, it was around 1400 crores in March 2020, then reduced to 900 crores, again 850 crores. So another good sign about the company. Fixed assets have been increasing, which is crucial point for such companies. When we look at the shareholding pattern, we can see that promoters holding is around 75% and it has remained constant in the past few months or quarters, we can say. and the three-fourth of the shares are with the promoters itself, which makes the float capital very less in the market. Another wonderful thing about the stock, foreign institutions holding have increased in the recent quarter. We can see that it was around 1.63 percentage in March 2021 till December. It is around almost 3 percentage. Domestic institutions, however, have maintained negligible holding. It is around 0.01 percentage, and public shareholding is around 22.54 percentage. Guys, when we have a look at the past earnings growth, we can see in the last 5 years company has grown their earnings by 43.5 percentage, which is more than the industry, more than double of the industry, and even more than the market. In the last 1 year, however, company has lagged somewhere. They have although grown by 33.6 percentage, but the industry has grown by 37 percentage. So not a huge difference, just a small percentage. Having a deeper look at the financial position, we can see that this in the short term the assets are around 19 billion, liabilities around 8.92 billion. So they have sufficient assets to cover all the short term liabilities, as well as in the long term their asset seems far more than enough to cover all the liabilities. So we can see here that company does not have huge pressure of liabilities or huge interest cost. Another good thing about the company, or a positive factor, let us have a look at the future outlook of the industry. As we earlier discussed, that company has a good demand from the food and beverage and pharmaceutical sector, and the growth in modern retailing, high consumer income is supposed to accelerate the growth of the packaging industry, and company has become a significant player in the BOPP, BOPET and CPP films, as we discussed just now. Now, guys, this is a report by Modern Intelligence, and in this, I found that packaging industry is supposed to grow by at a massive 26.7% CAGR in the next 5 years. That is from 2022 to 2027. And if a company has good fundamentals and a good market share in this industry, then it can even grow by a major percentage, a percentage more than 26.7. So suppose if a company is a market leader, it can also grow by 35 to 40% CAGR. So guys, as Jindal Poly Films as a good established player of the packaging industry, so it is very possible that company might also grow at a CAGR higher than this. Now guys, any CAGR I feel greater than 15-20% is a good growth rate, and in the next 5 years this might accumulate. The power of compounding is very strong, and it can be reflected in the sales of the company. Now guys, this is the chart of Jindal Poly Films on a 1 day time frame. We can see that the currently stock is around 1200 level, and on 17th March we can see this bearish candle, and the reason is the resistance which the stock has around this level of 1300, 1330, where there are a lot of suppliers, lot of sellers of the stock, and the major demand zone, the major support zone is around 932. You can see a black line here. So, and also this red line is the 50 days moving average, and this blue line is the 200 days moving average. Now we can see that the stock started declining from this level of 1330 due to the Ukraine and Russia war scenario, and in fact broke this 200 days moving average, and most of the stocks broke this 200 days moving average in that time. But the market soon recovered, and as a result we can see a good upward move in the stock from this level of 930, where it took support, to the level of 1330. In fact, stock reached to 1450, but it didn't give a closing above this resistance. Also guys, another bullish sign about the stock, we can see here this is the CPR of the stock, and it has crossed the CPR. So this proves that the stock is in a bullish momentum. Now if it comes back and takes support from the CPR or 50 days moving average, or even the 200 days moving average, if there is more downfall in the stock, then we could think of entering in this stock. So for the short term, the level of 1100 could be a good level to enter in this stock, only if it shows a strong reversal sign. So guys, this was all from this video. If you found the content helpful, then please don't forget to like the video and subscribe to this YouTube channel. Thank you.